Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about inflation and on the other side, deflation. And the reason I'm talking about that today is because I truly believe that I think a lot of people don't understand what inflation actually is unless you went to economics class or something. You have some sort of degree in economics, but your average Joe just sees inflation on the news or hears about it and knows that it was a high number, and now it's getting lower. And Bank of Canada is raising interest rates, and why are they doing that? And so I'm going to do a little breakdown of what that is and how the opposite of inflation is also a bad thing, or can be something that is negatively impacting the economy. And so if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so what is inflation? What is this number that the Bank of Canada is battling, and how long has inflation been around for? Well, I'm going to answer that question first. And how long has inflation been around for? Well, it's been around forever. Probably the dawn of time, inflation has been around, or when trades and goods, services have come into play with human society. And so inflation is a percentage that measures the cost of goods, whether that's groceries, whether that's gas, whether that's clothes, services, products, anything of the sort. And so the target rate, and the target rate is the rate that they want to keep inflation at, is about let's call it 2 to 3%. And they want to just maintain that as a good, healthy number. And people might be wondering, why would you want the cost of goods, the cost of services to go up at the rate of 2%? And why not just get rid of inflation, period? Well, there are a couple things. Inflation at a 2% or 3%, or the cost of goods and services going up by 2 or 3%, is a sign of a healthy economy. And what does a healthy economy entail? It means people are working, people have an income, businesses are doing good, and there's growth in the economy. And who doesn't want growth? I mean, if you're investing in stocks, you want that company to make revenue so that you get that spread of where you bought to where you sell, if you ever decide to sell. For those that buy and hold, this might not apply to you. And so that's what inflation does, is a 2% every single year increases on services or goods is a good number, because that shows a good, healthy, growing economy. Why is a high inflation bad? Well, high inflation is bad because high inflation causes those goods and services to shoot up quite quickly, and so quickly that the rate of your growth in income cannot keep up with inflation, which means your purchasing power, the ability to buy the same amount of groceries, let's just use groceries as an example, the same amount of groceries this year compared to last year is much less, because your buying power is less. Inflation eats away at what we call buying power. But every single year, when, let's say, you get a raise at work and it keeps up with inflation, that means you get to buy the same amount of groceries you did last year. Why do people invest? To keep up with inflation or beat inflation. And that is inflation in a nutshell. High inflation is not good, and that is the battle that is going on with the Bank of Canada. Now, some people might argue, why not just get rid of inflation? Well, if you get rid of inflation, you have this flat economy where there's no growth and there's no decline, which means nothing's happening. And when nothing's happening, nothing happens. Now, that's nearly impossible to do, because people will always spend money. People need to spend money in order to live, to buy food, to buy goods, services, to build houses, to do all these things that require capital. If nothing happens, then nothing happens. You don't get more housing, you don't get any groceries, and so on and so forth. So that's one way to look at it in what I have learned about inflation. Now, what about the other side? Why not have deflation, which is the opposite of inflation? Well, deflation is also a bad thing. It might be good for those that stand at the checkout station when buying groceries, when buying clothes, goods, and services. Yes, it might be good. However, inflation and deflation can also be a measurement of how businesses are doing. If there is deflation happening in the economy, It might be good for your regular average consumer, but not good for business, because consumers will typically back off and hope that the price goes down lower. The thing is, when you don't buy those goods and services, that company does not perform, and that company does not make revenue, and that company that employs people has to start making decisions on whether to keep those expenses, which the biggest expense in any company for the most part, still to this day, are humans and employees. And so they will start cutting those employees, laying them off to keep their company running, to save on expenses. Now, what happens to that average person that does not have a job anymore? They have no income. They cannot buy goods and services because of deflation, because the company had to let them go, and now they can't even buy anything. Now, this can turn into a spiral of headaches, and who knows what could happen. The last biggest one, and you can use this as an example of deflation, is the 1930s, the Great Depression. Okay, nobody had jobs, nobody was buying anything because you could not buy anything, and people maybe had debt at that time. I mean, if you have debt, your debt stays the same, but you have no income to service that debt, which means you must go bankrupt, and nobody wants to go bankrupt. And so the other side of inflation is deflation, and can also be a bad thing. It means less spending, less revenue for companies, which means less employment. The inflation today, I think, is 4.4, which is up from last month of 4.3, which is down from 5.3 the previous month. The target rate that they want to go for is 2 to 3%, and I believe 2% is that number. Now, a 2% is a healthy place to be when it comes to inflation. Again, inflation at a 2% rate means the economy is healthy, and it's a good thing for the most part. This just means you have to get a raise every single year of maybe 2% to have the same purchasing power as before. And that's why it's important to understand what inflation actually is and what this battle is with Bank of Canada and inflation, what that means to your average consumer. I get it. There's economists out there who may watch this video and be like, yes, this is elementary stuff or just fundamental information. But for those that are average, in just learning about inflation over this past year and a half, this is something new to you, and I do believe this should be explained. Now, I'm not an economist, I'm not a know-it-all, and I could be wrong on some of this information. I'm just going based off of what I know. And of course, there's faults to that. So if you do have more accurate information, please put it down in the comments section, because I could be wrong and I could be off. What is Bank of Canada doing, and does that mean they're going to cut interest rates? This leads into the interest rate conversation, because all of a sudden, every single person cares what interest rates or the prime rate of Canada is that Bank of Canada is setting. Now, prime rate right now is 6.7%. Now, people are talking about these cuts that are happening and so on and so forth. And they're expecting it maybe next year in the second quarter of the fiscal year. But who knows what's going to happen? The thing is, Bank of Canada does not have to cut interest rates. Their battle is with inflation, not the battle with interest rates. The battle is with inflation. Now, if they can get inflation down to that 2 to 3%, the interest rate really doesn't matter, because if the interest rate stays at, let's say, 6.7% and inflation stays at 2.7 or 2%, what incentive does Bank of Canada have to cut interest rates? I mean, if people are still doing their thing, borrowing money at a higher rate, and inflation is down, there is no incentive. There really isn't incentive at all, unless we go into maybe a deflation period where Bank of Canada might have to cut interest rates so that it's cheaper to borrow money to stimulate the economy in that sense, but not stimulate the economy by giving out free money or printing money. That's the basics of a lot of things. Now, the cost of goods coming down, is that realistic? Sometimes it is, sometimes it's not. The thing is, when companies raise prices, and let's take groceries, for example, and some people might think that these companies are doing ill will. Perspective is something to have. What incentive does the business have in cutting prices? Maybe it's to increase sales, but if it becomes baked into the economy, where it's normal to be spending $5 on a jug of milk when it used to be $2.50, long time ago, from what I've heard. What incentive do they have to cut it back down to $2.50 when they're making profit. There really is no incentive unless they're going on sale or somebody's competing. And this is where opportunities come for those that are maybe entrepreneurs and looking at these things, because there's opportunity always. And that's why it's important to start paying off your debt, to start investing, to stay ahead of this inflation, to stay ahead of interest rate hikes, because your debt stays the same for the most part. That number stays the same. Interest rate might change depending on the type of credit, but that's why it's important to pay debt off in certain periods, and why it's maybe a good strategy to borrow in certain periods, but not to over leverage yourself. And so that's a side note. We could go into another video about that. But yes, that is inflation, that is deflation. Both are equally detrimental to the economy. What we want is a healthy economy for consumers, for the most part. And so kind of lost my words there, but that's pretty much it. Inflation, bad, can be, but we want to keep it at a healthy rate to show that the economy is healthy, to continue frequent spending, but not overspending to the point where demand is so high and prices go up. And we don't want deflation to the point where people are losing their jobs and can't afford things. We want it to be at a healthy rate, and that's why there's this inflation rate of 2 to 3%. And so hopefully you guys learned something from this video. You can take something out. Don't forget to leave a like and subscribe, and hopefully that clears things up. We'll see you guys in the next one. Bye.